Hey everyone, it's Brent from Enter Your Wealth, and I'm so happy that you're here today because we're talking about cash secured puts. And specifically, we're talking about the three things that you must know when you're trading this strategy. And it's okay if you're a beginner, this is great for beginners and a great way to make passive income for the stocks that you want to own. And I'll explain everything in this video. But before we get into it, please hit that like and subscribe button and comment something uplifting to your fellow viewer that will let them know that they are on the right path to their financial freedom. Without any further ado, let's enter the cash secure put. So here we're in Robinhood and we're using Snapchat as an example. And so these are kind of the things that you got to know about the cash secure put. So when I'm saying cash secured put, it means you are selling a put and you're using cash as collateral. What does that mean? If the share price goes to the strike price that you're selling at by expiration, then you will be forced to buy the stock at that price, specifically 100 shares at that price. But we're also receiving a premium, a credit, to be doing so. So with this option strategy, someone's going to be paying you to wait and receive it. And if the stock keeps going up higher and you don't end up getting the 100 shares at that price, you still get that money for waiting. So let's get into it. The number one important thing you need to know when selling cash secured put, know the key support levels. Snap kind of flew up at a certain point here, and you can see it kind of fell recently. But see, look at this gap. It was trading from 60, went all the way up to 78, 79, almost $80. So do you think we want to actually be buying in these prices? This is like all-time highs for Snapchat. We're starting to see some consolidation here and even a support at $70. And actually we kind of went back up to 71.81. So the way you can look at this is I can kind of see a few different levels here. So remember, we want to define kind of what is a good level or what price we would want to do it. And how profitable is it, and is it worth it to even do this? I'd say one key level here is $70 because it has bounced off this kind of 70.37 right here. You can see it aggressively went up, and it also retested it down here and bounced back again. So these aren't even candlesticks, so I don't even know the exact thing, but it's just an estimate. Other thing is we see that we were in this like $63 range. And I feel like since there isn't any supports here, it's hard to determine what is a good price to actually get in at that point, right? So, but it's important to know that we have this $63. So this is significant, at least as some type of resistance. So you could say $63 is a good one. So remember, technical analysis is important for choosing these levels. Number two is you have to make sure you're owning a stock that you don't mind holding for a long time. And the reason is this. So imagine if I did set my cash secured put at $70 here. I receive a premium for doing so. And it ends up pulling back all the way to $63. Oh no, I bought 100 shares at $70. That's a pretty big loss. That's a $700 loss if I bought 100 shares, right? So to me, even if that happened with Snapchat, I would be fine holding it. Ideally, I would choose probably a range more into this, and I'd probably wait for it to come down even a little bit more before I did anything like that. And this is why. Because I don't want to be digging myself out of the grave. So when you trade the strategy, you can actually combine it with covered calls because you own 100 shares after this happens. So when that happens, you can sell covered calls and dig yourself out of the hole slowly, or the stock will go up eventually. But you don't want to be in that situation. That's worst case scenario, actually. So make sure that you are picking something you want to own, because you can be selling cash secured puts on a really bad stock, and then what's going to happen? You're going to be owning this stock, and you might have to sell for a loss, and you never want that to happen. That's like one of the only ways to lose. This is a strategy where if you play it really smart, you won't lose. Trust me on that. So we're going to go into kind of what goes on into this. So you have to trade snap options here in Robinhood, and then you want to set it to sell put. So another important side tip here is you always want to be kind of choosing between 2 weeks to 1 month expiration. That is what's worked best for me. So, we're already reaching this 27th. I'd probably pick September 3rd here if I was to do a cash secured put. So you see, the lower we go down, the less we're going to be getting, right? And look, you see, I get $205. So remember, this is a multiple of 100. So 2 times 100 is 205. So if I bought this, I'm gonna actually be getting paid $205. That's kind of good, right? So that means if I bought it now, this actually protects me to $68 because this is offsetting my loss. So my break even is $68. Let's look. So another thing I like to look at is this chance of profit number. Generally, I'm looking between the 65 to or the 75% profitability to 85%. So going to that $70 is pretty aggressive. I have to think that's a really strong support level. So this is why I think it's good to wait for something to be within a range of a key level. So if this drops further, then I'd be more inclined to look at a cash secured put, because the closer the share price gets to the stock or to the strike price, the more expensive these prices will get into. And another thing, guys, is you don't have to hold these to expiration. If the share price skyrockets after you have bought one of these cash secured puts, your puts will actually be cheaper, which means you can just buy them back for a cheaper price, and that's just profit. So that's just another, and then you reduce your liability essentially. Every day you hold these options, theta is gonna be working for you. So don't forget about that. You can collect the most as you want, but in my eyes, if I'm getting 90% of it, I'm just gonna take it out, because what's the point? I have everything to lose at that point and only 10% to gain. It's not worth it for me. So the last thing that you want to know with these cash secured puts is you want to calculate how much you're getting in terms of how much you're putting in. So when you're doing a cash secured put for this $70 strike price, I actually have to have enough money to buy 100 shares at $70. What is that? $7,000. Okay, so let's just go to the calculator really quick. 205 divided by 7,000. And you can see we're getting a 3% return here. But you kind of do want to be choosing premiums that are actually worth it for you. You definitely want to be going for 2 to 5% for 2 weeks. Thanks for watching, and please let me know if you like this video, and I'll see you next time.